Hey guys, today we're going to be talking about UIPath, ticker PATH, and if I would buy, hold, or sell, stick to the end for DCF analysis. UiPath automates repetitive tasks using AI-powered bots, allowing humans to focus more on the creative side of things. It handles data entry, invoices, and reports, and it's much faster and error-free when compared to humans. Agentic AI could be the next big thing. Agentic AI is autonomous AI systems that can make plans, decisions, and take actions to achieve goals with minimum human supervision. The company maintains a pretty impressive list of customers. If we take a look at their global partners, there's Microsoft, Google, Amazon, Salesforce, Zoom, Slack. I mean, these are all even on the partner from the GTM perspective, Deloitte, PricewaterhouseCooper, IBM. I mean, these are big names. And a lot of their clients are very happy customers. And what I mean by that is if you look here to this graphic among AI agents, they have a little ranking based on their performance of their AI agent. And you can see number four on the list behind huge names, ServiceNow, Salesforce, Oracle, and here's UiPath, ticker PATH, at 82.8%. And probably the only name on this list with a sub $10 billion market cap. And this may be a little difficult to read here, but it still illustrates the point nonetheless here that according to a report from Gartner, Path has the best ability to execute and the most complete vision here in the agentic AI space. It's a company that I envision when I hear that AI is taking jobs. That the job this company will take are, the back office busy work, those mundane tasks. And it's cheaper to use this than to hire. And looking at Gartner's graph here in the top right quadrant, defined as leaders in this space with UiPath at the lead of it. So here are some of the company's recent highlights from their most recent quarterly reportings here. $362 million in quarterly revenue. They've locked up 1.7 billion in annual recurring revenue. 62 million here in non-GAAP operating income. 14% revenue growth year over year. 11% growth in the annual recurring revenue, and a 17% non-GAAP operating margin. And if you just take a look at it, what institutional investors are doing, they've never abandoned ship and continue to steadily add and not sell any of the name, which is a good indication for, where the future direction of the company will go. So what caught my eye when I first was looking at this stock is their partnerships. I mean, they have some serious notable names, and whenever Nvidia hops in on something, I'm pretty keen on following Jensen Huang. He's seems to be at the forefront and really have his head on straight with everything speaking of artificial intelligence. But yeah, they partner with OpenAI, Nvidia, Snowflake, and I mean in Q2 2025, it beat expectations with 362 million in revenue, up 14%. Q3, they're up about 11%, but we're starting to see, the growth reaccelerated for 2 quarters, but now it started to slow down. But all the meanwhile, I've attached here the all-time stock chart here for UiPath, and it's down 75% all time. I just pulled up some of the valuation metrics here, pull out the laser pointer, and we can just review here. EV to revenue trading at about 4 times. Not exactly expensive, not exactly cheap, middle of the road, in my opinion. Price to earnings 22 times, usually for nice tech, you're looking at 30 times plus, usually around that 30 area. So a little here. Here's a nice measure to look at, the what's the free cash flow yield, the market cap to free cash flow produced. And 5% is really good. If you see something at 10%, that's like you never see it. But 5% is pretty good. And looking at it, I don't think it's super expensive. I don't think it's super cheap, but let's hop into a DCF and dig a little further. So, in my opinion, the hardest part in the DCF for this company is kind of trying to nail down their revenue. We have seen some softening demand quarter over quarter when you look at it in a broader historical context, but looking to now, I decided to be, a little more edge on the air of aggression than conservative. And let me explain why. if AI really does pan out here with, the Agenics, I think this company could be at the forefront of it. And from reading industry reports here, they're projecting at about 40% compounded annual growth rate through 2030 plus. But the company's only given guidance of about 10%. So I just say, 40 plus 10, 50 divided by 2. I'm at 25. I think it's a little more priced towards perfection than imperfection in the sense that, they're going to have to execute to meet the price I'm given here. But assuming they grow at a 25% year, this is actual, this is analyst consensus. And then, taking a blend, if you go with just the company's estimated 10%, you're going to be a lot lower here than the $23 price target. Or if you air up to the 40% CAGR that you think the market's going to hit, you're going to be well above the 23. So, I mean, trying to sit in the middle here at 25, and they're making about 21.4% on margins. Mid 20s isn't uncommon for tech companies like this. So 24%, I think, is what the analyst estimates I have. I think believe them have 24, kept it cap at 24. I got a 10% discount rate here, and going through the present value of the cash flows, I get about 13.6 billion. They have about 1.5 billion in cash, 79 million in debt. That gives us an EV of 12.2 billion. About 531 million shares would give us a share price, from now until infinity, a fair value of 23.07. It's trading at $18. 26% margin of safety, pretty good. I like to see a higher margin of safety. I mean, it really comes down to what do you think's going on with growth? If you think they're erring more on the 40% CAGR and Agenics AI is going to be the next big thing in this AI revolution, then 23 is on the low end. But if you're looking at company guidance and want to be ultra conservative, then I think it's going to be lower than 23, and it's already looking more fairly priced. So for me, it's a hold. I want to see what to do more. I mean, everyone has their own opinion, especially what you think about the Agenix AI. Let me know in the comments.